we always come from a place of education, right? So people that are in pre-foreclosure, they're so overwhelmed. Generally, their head is in the sand. They don't want to deal with this. They've been in default for a while. And now the reality has hit that they're about to lose their home.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association, providing benefits and services to real estate investors and rental property owners for over 48 years. With your host, Brian Hamrick from Hamrick Investment Group.
This episode is sponsored by Green Property Management, now offering a $250 per unit project allowance to new clients in West Michigan. Find out more at livegreenlocal.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Hello and welcome to episode 313. Today, we're going to talk about short sales. This is a technique that's used to work with a lender to get them to allow the sale of a property for less than the balance owed. Successfully negotiating a short sale can provide a lot of upside value for investors, but it also takes knowledge and skill. Nicole Espinosa is known as the short sale queen. She has closed thousands of short sale transactions successfully and continues to process hundreds a month for clients nationwide. She's also the best-selling author of Short Sale Uncensored and is the leading short sale expert based out of Dallas, Texas. Nicole, welcome to the show.
Thanks for having me. I'm excited to be here.
Tell us a little bit about yourself and how you got started investing in short sales.
I got into the real estate industry back in 2008. So when people were probably getting out, I was coming in at a very unique time because the market was flooded with foreclosures. So my first experience really with real estate was dealing with REOs. I worked at, which is foreclosures. So I worked at a foreclosure office, working directly with asset managers, pretty much managing, over 150 listings a month. I mean, it was absolute craziness. And I'm sure anybody in that time would tell you the banks had no idea even what they were doing. They were just sending us listings as a brokerage with the legal description. And then they said, here, figure it out. So I definitely got thrown into it and learned a lot, learned the hard stuff before I even, knew anything else, and did that for a couple of years. When I got out of doing REO, I got my license as a real estate agent and decided that I wanted to, dive into real estate thinking, okay, I've got all this knowledge and this background of working with banks, but how do I kind of connect the two? And of course, my first listing was a short sale. So fast forward, I realized that there was such a need in this market for this niche when it comes to education and when it comes to really understanding the process, because most people have no idea. They either think it's a waste of time. Most real estate investors, run when the numbers don't make sense. They throw away those leads after they spend so much time and money with direct marketing. So it's a perfect synergy when it comes to my relationship with real estate investors. I invest myself, so I understand, what it looks like as far as needing to make a profit if you're going to flip the property, if you're going to hold it, whatever your exit strategy is. And I've been doing this for the last 11 years, and I'm 100% referral based. So that says a lot, especially for people to continually refer over to our office. We have a great system in place that we are able to scale and manage that many listings a month.
Give us the Real Estate Investor 101 on what a short sale actually is.
A short sale is where a homeowner is in some type of financial distress, right? So they're behind on their mortgage. Generally, how it looks to an investor is they're in foreclosure, they're losing their home, and they can't afford to sell it. They can't afford to sell it, to an investor or to anyone because they have no equity in the property. So they owe more than the house is actually worth. And they owe it through their primary mortgage, through their liens and judgments. And generally the house is distressed. Although we do sell, some really pretty homes as well, but the majority of the houses, I'd say about 60 to 70% of the homes that we sell are distressed because they can't afford it. It's like a domino effect, right? Like you're behind on one thing, you fall behind on everything else, and they can't afford to keep up the maintenance with the house. And that's where it's perfect opportunity for an investor, because for an investor, they are not able to purchase the property outright because they owe more than the house is worth. So there's no equity. right? So generally, when an investor looks at this, they say, okay, the numbers don't make sense, move on to the next deal. But what makes this perfect is that we're negotiating directly with the bank. So the bank is the one taking the loss and taking less than what is owed. So there's still an opportunity to get a discount on the property while still helping that homeowner.
Compare the market back in 2008 when there were a lot of properties that were upside down to the market today, where in many places, not all places, the values have gone up to a point where short sales aren't as common. Where is the market that you're finding right now where you can still do the short sales?
That's a great point, because there's such a huge misconception when it comes to people, being upside down and the market being so great. Right. So I remember in 2011, 2012, things started really turning around, and, the market was stabilized and people were fighting for properties like similar to now, obviously not as significant as the things we're dealing with now. But I remember people asking me the same question, like, how are you finding short sales? And what we need to remember is that the seller is the one that is distressed. It's not necessarily the house or the market that has anything to do with their financial situation. So how someone gets upside down in a market where people are fighting for properties is easy. They fall behind. They stop paying for years. They try to do loan modifications, which modifies the terms of the loan. So their balance is increasing, every month. And all they have to do is fall behind far enough and do something like that to where now their balance has increased significantly to where even if the market keeps appreciating, it's still not going to factor how much it's gone up. So I'll give you an example. We had someone last week that their original note or their original mortgage was $300,000. Okay. So they took out the mortgage for $300,000. We requested the payoff and it's $410,000. So when you look at those numbers, you're like, it's insane the amount of money that they're able to charge between the taxes, like the escrow taxes and everything else. There's no way that even in the best market that they would be able to sell, $110,000 more than what they originally paid. Now, don't get me wrong. There's a lot less short sales because the people that were marginally underwater or marginally upside down, where it was only like about 20 or 30,000, we've been able to sell them traditionally because people are willing to spend over, asking or over what it's worth. So for them, they were able to break even or maybe even walk away with something, as another market, they would have had to do a short sale. So we have short sales all over the country. We are currently in 14 states. There are, places that have higher, amount of short sales because the default rates are a lot higher, especially because when the moratorium expired in September, places like Texas, like we are a fast foreclosure state. So we're non-judicial, which means that we don't have to go through the courts. Every, 30 days on the first Tuesday of every month, they foreclose. So we're a lot quicker than states that are judicial like Florida or New York or things like that.
I think what I'm hearing is that it's not necessarily that the value of the property is underwater. It's that the borrower is distressed in that they've missed some payments. Maybe they're non-paying on their note. The lender has had to pay property taxes. The lenders had to pay attorney fees, and they're charging these fees to the borrower. So this $300,000 note that you used as an example, well, the borrower has run up over $100,000 in expenses on that note because the lender has to keep applying their own money toward their expenses. Those are the situations then where you're finding these are much more common and you can get a short sale on those types of situations.
Absolutely. And again, anybody that's really in foreclosure, for any certain amount of time, more than 6 months or a year, they'll find themselves in a situation like that. And then, of course, how we see the market shift is once we see more homeowners that need to sell and the demand starts going down because we're starting to get more inventory, that's where we'll see a influx of even more short sales in the next year or two, where people are going to start seeing a wave of those pre-foreclosures coming to the market because right now it's been very controlled, right? So Biden put into place, he kept postponing that moratorium. So people in forbearance were protected and didn't have to pay. Well, now everything's up, right? They're still trying to protect borrowers by saying, hey, if you apply for any kind of assistance, we'll just stop your foreclosure. But January of 2022, they're not going to be lenient anymore. The banks on conventional loans are super aggressive right now because they haven't been able to foreclose in over a year. So even the foreclosures that are happening, we are more than ever finding it more challenging to get them stopped. So we're going to start seeing a lot more inventory here in the next year.
I hear what you're saying out there from other people, but then I also see evidence that borrowers are getting caught up. They've got more money to get caught up, or even in a lot of cases, pay off their loans. So, and I don't want to put you on the spot, but is there data that backs up this sense of foreboding that there's going to be a lot of short sales and foreclosures?
Yeah, absolutely. So at one point, we had 10.1 million people that were in forbearance. Right. And so absolutely a lot of the people that were in forbearance, because, for the listeners, on your show, forbearance is basically a pause on the mortgage. Right. So this is where you don't have to pay, but once the pause is up, then you have to pay the full balance all at once. So think about this. If I didn't have one or two payments, how am I going to pay that full amount of over a year, right? So $30,000+, whatever it looks like. And so a lot of people in this situation right now are in loan modification. So it hasn't, basically what the government did was they gave 3 options. So you guys can actually look, this is covered under the CARES Act, and it's with the CFPB, right? So it's the Consumer Financial Protection Bureau that put 3 options in place to avoid a wave of foreclosures. They basically said, hey, if you have a government loan, which we know that the majority of the people in default are government programs, because you pay less to put a down payment and it's easier cost of entry to get a house, right? So those people are protected. All they have to do is call the bank and say, hey, I can't afford my mortgage. I can't afford to pay the forbearance. And so they automatically put them in some type of loan modification. But here's the deal. We have so many people right now that can't afford to get caught up. And then on top of that, if they haven't been paying for this long, statistically, we know that it's going to be very difficult for them to start paying again. So even for the people that are doing a loan modification, we know from history repeats itself that people are going to fall right back into foreclosure because we still have so many people unemployed. We still have so many businesses that were shut down due to the pandemic. And we still even have the pandemic going on, right? It's still not really over. We're still dealing with a lot of restrictions, especially in certain states. So all of that, if you look to see the amount of people that are actually in some type of retention option, and I don't have the number in front of me, but it's a significant amount. On top of that, on top of the amount of people that are in assistance right now or trying to get assistance, we still have 1.6 million people in forbearance that have still not come out. So we know no matter what, for the people that are not going to sell right away, they're going to drag this out as soon as possible because they want to keep their home. That's the number one objection that investors or anyone that's cold calling is going to get. I want to keep my house. I don't want to sell. We know that they have to work with us. They don't want to work with us, right? So all of those people are what I'm basing that off of, that in this next year or two, we're going to start seeing different waves of people that have no other choice but to sell.
Let's talk about the short sale process. Take us through the process. Sounds like people contact you or you have people making cold calls, talking to homeowners who might be in a situation where they would need a foreclosure. Walk us through that process, please.
We are 100% referral. So investors that are doing any type of direct marketing, and they're cold calling, direct mail, however they source these homeowners, once they identify that this person is upside down and the numbers don't make sense, that's when they bring us into the equation. And once they refer it over, we're pre-qualifying that homeowner. So we're going over, biggest thing I say, a catchphrase or whatever you want to call it, I say this all the time, is that we try to be proactive, not reactive, right? So we want to make sure that if we take something on, that we can close it. So we get everything up front to make sure we're doing our due diligence. So we're making sure that we have all the information we need so that we can submit everything at once to the lender. So once we pre-qualify them and we're like, okay, this is something that we can work on, we also work with that investor because they're going to be the ones purchasing the property. They're going to be the ones having the first right of refusal if they want to purchase the property. So we work with them and getting their offer and any type of repair bids or anything that they can give us to justify that offer. And then we go to bat for them in negotiations when it gets to that point as part of the process. So once we submit, the paperwork, that's when the short sale will get opened. And then the bank will order a third-party appraisal And that appraisal will determine the as is price. So it no longer matters how much is owed on the property. Now we're basing what they're willing to accept off that as is price. And that's where the negotiations start. Now, of course, at the end of the day, the bank's going to make the final say of what they're willing to accept and what kind of loss that they're willing to take. But we do everything we can to try and get that price aggressive enough, especially if it has to be sold to an investor, right? If it's not able to sell to a retail buyer with traditional financing, an investor is going to need to purchase it because we need somebody that, is able to pay cash. So we know that we're going to have to get it discounted.
So what kind of discount would you typically be able to get for an investor?
It's going to range depending on the kind of repairs needed. So we try to get, obviously every investor has different margins, right? Like on what they need out of the property. But if the property, wouldn't be able to finance, if it has any type of structural issues, we're able to get that price down. That's why we work and get the repair bids. And then with the lenders, they will take a certain percentage of that price. So for example, with FHA, they'll take as low as 84% of the value that they're, willing, that's how low that they're willing to negotiate. And then with conventional, everything's negotiable. So it's all negotiable from them. We've gone it down as low as 80% with conventional properties.
Anyone who listens to this show knows that Green Property Management manages my entire West Michigan residential portfolio. They manage single families all the way up to large apartment complexes. Marty and his team are running a new special that I think is absolutely nuts. And I tried to tell him so, but he wouldn't listen to me. They want to offer new clients a $250 per unit project allowance to have their in-house licensed crew tackle any project, big or small, for new clients. I can tell you from personal experience that their unique management style will save you money, eliminate headaches, and increase your net operating income. You add on top of that this limited time offer of $250 per unit for new clients, and it really becomes a no-brainer. So text GREEN250 to 21000 or visit them on the web at livegreenlocal.com and tell Marty I think he's gone off the deep end with this absolutely nuts $250 offer. If you're thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition myself, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Creasy at RCB and Associates. Chad is a professional health insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by the insurance company and won't cost you a dime. If you live in Michigan and are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Creasy at rcbassociatesllc.com. And then does that 80% leave enough margin for the investor to come in and improve it?
Is 80% of the as-is price. So if we're able to get the as-is price down, right, then we're also able to get a discount on top of that.
So there's four parties involved here. There's your company sort of in the middle. You have the homeowner or borrower who's in some sort of distress. You have the investor who you're working with who would be interested in purchasing this property on a short sale. And then you have the lender. So I want to go through all four of those. Let's start with the homeowner, the borrower, how you approach them, how you talk with them. And you said earlier about a lot of them want to stay in their home. So how does that conversation typically go when you're talking with a distressed homeowner?
We always come from a place of education, right? So people that are in pre-foreclosure, they're so overwhelmed. Generally, their head is in the sand. They don't want to deal with this. They've been in default for a while. And now the reality has hit that they're about to lose their home. So they're desperate, right? They have investors, attorneys, realtors, and the bank calling them, marketing to them. So we try to be the party that educates them. Like, hey, let's walk you through the options that you have so that we can walk you through the best option for you. And 99% of the time, the best thing that they can do is sell. Because generally, any other option is just going to put them in a worse situation, like bankruptcy or trying to modify their loan or just giving it to foreclosure, right? We know that, but we don't want to push that on them. And we want them to kind of arrive to that conclusion themselves of, hey, we have an option for you where you can walk away free and clear. Your debt is being settled and you're having someone advocate for you at no cost. Like, how does that happen, right? In what world is there another program where you can walk away from all this debt and not have to pay it, but still, be able to get help and not have to pay for it, right? So in those situations, we try to come from a place of education, explaining the process, explaining why the benefits of the short sale and how this can put them in a better position so that they can walk away free and clear and just move on, to the next chapter of their lives.
How often are you able to get through? Because I know this is a very emotional decision for a homeowner to make. And like you said, a lot of times they have their head buried in the sand. So how often do you actually have success working with the homeowner to get them to understand that the option you're presenting is possibly and most often the best option?
I would like to say the majority of the time, because it's very non-threatening. Even when I teach, and we were also in the education space, and when I teach other investors and realtors, I tell them, like, if you come from a place of value of where you're at, where you actually care, right? Where they know, like, hey, not only just do they know what they're talking about, but they're sitting here explaining and really helping me understand, you're going to build rapport every time, because they don't have anyone like that truly gets it, right? When I'm sitting here telling them, hey, you need to ask your bank, if you're in the middle of something right now with the bank, you need to ask them this, this, and this, and then make sure that you're protected. And I'm explaining that to them. They're immediately using me as a resource of like, okay, what else? But what about this? They said this, they said this. And a lot of times these homeowners don't get on board because people come with this approach. Like, let's talk about investors, right? What is the most common thing that we see investors do? Hey, we'll pay cash and close as quick as 7 days, right? They'll say 3 days, 7 days, whatever. That's the worst thing you can say to a homeowner in this situation, because literally they'll say, that sounds awful. I don't want to move in 7 days. I can't wrap my brain around leaving, and I don't want to sell. So I'm good. Thank you. And they immediately are turned off because all they know is that they're being pushed and pressured, that someone's trying to make money off of them and they don't want to leave. But if you sit there and say, hey, Bob, what's going on, with your situation, let's walk through what your actual options are and kind of debunk in their head all of this delusional thinking of that they actually have other options. Then you work it through with them and they're like, okay, you know what? You're right. This is the best situation for me. What do we do to move forward? Especially when they're in foreclosure, because you are on a time clock. So you don't have time to be, to not do something. And most people wait until the very, 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 very last minute where they have no options. It's very rare for homeowners to be proactive just because of ignorance. They don't know any better, and they don't know that they can get help.
Let's talk about the lender now. You talk with the homeowner, get them on board with the idea of doing a short sale. Now you've got to talk to the lender. Tell us about that process.
Most people think when it comes to short sales that the banks are actually the worst part, and it's actually the seller. The homeowners are the hardest part of the process because they have all control. So I could do everything right with the bank and beat them up in negotiations and be successful, and then the seller cancels, right? So that definitely is setting the expectations. That's definitely the hardest part. Now with the lender, depending on, which part of the process, it can be very difficult. It can be very difficult of getting them to understand the true value. It can be difficult in advocating for the client of making sure that they actually get approved, because not only does the offer have to get approved, but the homeowner has to get approved. Their financial hardship has to be approved in the process, or we can't even get to the negotiations. So we have to show the lender that the sellers have a financial hardship. And that's the first part of the process. And that's probably the longest part. And a lot of times why people are like, why is this taking forever, right? Short sales are not short, unfortunately. So that process, we're going back and forth with the bank, explaining the situation. They're going through their financials, and that's where, it can drag out. So with the bank, it can get stuck in a lot of different parts of the process, but we know what every lender requires. And I think that's really the key, is that we've done so many that we know that Wells Fargo is going to require, this, this, and this, but Chase is completely different. So Chase is going to require X, Y, and Z. And that's really important because the lenders, I say in my book that it's like the blind leading the blind for people that don't understand the process, because they don't get it. The bank's not going to explain it to them. So they're like, oh, we're waiting on the realtor or the person working on this. And then the person working on it is like, well, I'm waiting on the bank. So it's just this whole like back and forth. I mean, I can't even tell you how many times I hear all the time from investors and realtors like, hey, the banks don't want to take a loss, or the bank wants this price, they're not budging. And or the bank won't even work with me on it. Like they'll deny the short sale. They don't want to approve a short sale. And that's not the case. Generally, when you can't get something approved, you're asking the wrong questions or you're talking to the wrong person. And people just don't know how to get around a no. And so they just say, hey, it can't be done, but it can. And so it's just all the way you approach it.
How would you know if you're talking to the right person at the bank?
If you're not getting anywhere, if you know that this person is like regurgitating, it's like they're reading from a screen and they're like, oh, we can't help you. Sorry. There's no solutions. There's no actual like moving forward with the process. You're talking to the wrong person, because there's always a way. Everything is negotiable. So if someone's telling you, sorry, we can't, or they don't know themselves, then you need to talk to someone that either has the ability to help you move it along. You know, what the short sales are known for is like the no update, right? So where a negotiator will sit here and say, hey, we're reviewing it. Reviewing what? Right? And most people don't ask questions. So they're like, okay, the bank's reviewing it. And 2 months have gone by and you're like, where is this stuck? Like, why are you still reviewing the same thing 2 months later? And it's because generally there's an issue, but the person you're talking to has no idea what the issue is. So they keep telling you the same update over and over again. And then you realize like, she has no clue. Like she's telling me this because she has no idea. So then you start asking questions, right? The right questions are, what are you reviewing? Why is this stuck? Why can't we move this along? Who's actually reviewing it? What's missing? You know what I mean? And so and that's just a life principle anyway, right? Like all about asking the right questions and providing solutions. That's all we do in real estate. The most successful investors, the most successful people in this industry they know how to provide the solutions or connect people that, and provide it, or find people that can provide it.
How do you find the right person to talk to at the bank?
From experience and navigating is identifying that the person you're talking to has no clue, right? Like, hey, or not getting anywhere. And then asking them, hey, who can I talk to, right? So generally the way a lender is set up in loss mitigation, which is the short sale department, generally the way it's set up is you have a processor that reviews all the paperwork. And then you have a negotiator that their sole purpose is to negotiate, all of the line items on what they're willing to pay and what they're not willing to pay, right? So once it gets past the processing, the seller's approved. So the seller, you don't have to go back and forth about the paperwork or whatever. But in processing, it could get stuck. So you could be going back and forth with the bank and you realize that, hey, there's paperwork missing. And so really how you know or how you get through that is the people that are talking, you ask specific questions. Hey, is there anything else that you need? Where do we stand on this? Who is the one making the decision, right? Who is the one reviewing it? Who is the one that's actually going to say yes or no on this so we can move forward to the next step? Like that's how you get through to the right person, because you start asking and you start realizing, okay, well, it's my supervisor. She has to go through underwriting. Okay, great. Give me to your supervisor. You talk to the supervisor. Okay. You realize, hey, it needs to go through underwriting. Great. Can you connect with them directly? Because we've been going back and forth for months. So that kind of gives you an insight of what we do every day. Like we literally are kind of putting pieces together. And sometimes we're educating the lender. Sometimes we're educating the negotiator saying, hey, this is an FHA file. Have you submitted it to HUD for approval? Oh no, I didn't do that yet. Okay, great. Can you do that today? We're pushing them. And because we know the process, we know that X, Y, and Z has to be done or we can't get this approved or we can't move on to the next step.
Why is it a lender is willing to do a short sale in the first place?
At the end of the day, if the bank or the lender takes back the property, they would have to hire an attorney. They would have to pay to actually foreclose on the property. And then they now have to manage the property until they sell it, right? And at the end of the day, they're only going to sell it at market value. So if they sell it through a short sale where the seller's cooperating, where they have an agent involved and they're selling it at market value, they save a lot of money. And so the way they look at it is, okay, if I take a loss here, it's going to be less of a loss than if I took the property back in foreclosure. And God knows how long, the process would take, right? Once they get the house back, because it's a complete mess. And then we don't know what the seller is going to do to the property. So we know historically that they're going to make less in a foreclosure than they would through a short sale.
It sounds like you have investors lined up to purchase these opportunities. Is that the case?
For a lot of them, because we work with all kinds of investors, right? So we work with, strictly wholesalers. We work with, investors that have pretty big portfolios that will hold them. And then we work with investors that are just flipping. So if the investor referred it over to us, they have the first right of refusal. So they're the ones purchasing the property unless they don't want to. And then we have that opportunity for someone else, or we can put it on MLS. But at the end of the day, we do have properties that are self-referred. So we have homeowners that will come to us directly. So we do have opportunities there. I will say that we don't have a buyer list. I get this question all the time because we have relationships. So we don't have random people. Like, we all know that commodity is the property, not the investor, right? We know that once you have the good deal, that's where the value is. And so we work with people that work with us. So people that we've established relationships over the years that are referring deals to us. If we have good opportunities, we'll always go to them first. And we're always looking for partnerships across the country where we can also collaborate.
Give me a specific example of a recent deal you've done. Walk us through it from the investor's point of view, like the opportunity, the upside value that they were looking to achieve and how that turned out.
So I can give you one that we did a couple months ago, specifically because I had to step in. So I know a lot about the details. So I have, just to give you an idea, Stephanie Parks is our operations manager, and she's overseeing the negotiations. And so generally at this point, when I'm stepping in, it's to solve problems, right? It's that something hits the fan. I don't know your audience, so I'm trying to censor. So if something hits the fan, then that I'm stepping in to make sure that we are, on track and that everybody is good. So in this situation, the investor, it was an estate. So we had to deal with probate. The investor was working on this close to a year. And when they finally were able to get the executor of the estate assigned and work through all that, they realized that the payoff had increased significantly, right? Which is very common because the longer it goes on, the longer they're in default, the balance is only going to increase, as well as all of the other fees, right? Like homeowners association fees, everything. So in this situation, they had worked on it for so long and they had sent it over to us because they were about $40,000 over what they needed the price to be when the payoffs came back. So we started the short sale. This one specifically was with Wells Fargo, and they had, I believe, 2 liens on the property. So it was a mortgage lien and an IRS lien. And so the IRS lien also put them, upside down because of how much the balance was. So in this situation, the investor ended up, when we did the negotiations, because the house was a mess. I mean, it was a hoarder house, and then it's an estate now. So you really don't have, anybody that cares enough to do anything to it, right? In this situation, we were actually able to get the offer about $10,000 lower than what they originally wanted to purchase it at. So this guy got a crazy good deal. And he had put so much into it too. So he had already done a lot of the legwork, which is not normal. Usually when somebody refers it over to us, that's what we do. We do a lot of the title work or whatever to make sure that title's clear and that, again, that we're actually able to sell the house. So the short sale took about 4 months. It was in a really great area. So prices were only increasing, especially in DFW and Dallas-Fort Worth area. I mean, I don't know what it's like in y'all's market, but we had about 3 weeks worth of inventory here. So, ugly, distressed, disgusting houses were treated as if it was amazing, right? People were just willing to buy whatever. So that in itself also helped his numbers because, he ended up making a lot more. I think the challenges on this one was, of course, the price. We had him send out about 2 or 3 different contractors for different bids, specifically for foundation and roof and things like that. We went back and forth with the bank because originally they wanted about $40,000 higher. And so we had to negotiate with them. And then the biggest thing where I had to step in was the second lien, because the IRS did not want to discharge it. They wanted the full amount. And so dealing with the IRS in general is always a nightmare, right? So anything government related takes forever. No one has a sense of urgency. They don't care. That's just across the board. And so we had to find contacts that would actually move it along because they said they denied it and we had to keep going back and forth to get the judgment released. So that was probably the biggest issue on this one because it was holding up everything. We finally we beat down the bank on the price, and then we couldn't get that IRS judgment released because the lien was I mean, more than what the bank was getting. It was for a crazy amount. And that happens a lot, right? When you have multiple liens, when you have second liens, when you have HOA liens, sometimes those are the hardest part because they're taking the biggest loss. So when you have an HOA that we just settled this week from $15,000 to $1,500, they don't like that very much. So how do you get them to say yes? I mean, that's probably the most difficult and complicated part of the process.
It sounds like that's where you and your team come in, is negotiating those numbers down.
Ultimately, we're representing the homeowner. So we want to make sure that they're taken care of. We want to make sure that they're not only avoiding foreclosure, but all their debt is settled. And so that's, of course, the biggest challenge.
Let's talk about you and your team, because it seems like you're in the middle, convincing the homeowners that the short sale is the way to go, convincing the lenders that they should do this, working with the end buyer. How do you get compensated for that?
So the best part about this entire thing is that the bank pays us. So the homeowner, we don't have to worry about collecting from the homeowner because, let's be real, we wouldn't be able to. So the homeowner doesn't have to pay us. The investor doesn't have to pay us. The bank will pay our fee, and we charge a percentage of the purchase price to the bank. And it's very much just like a traditional commission. So we charge a percentage to the bank and the bank will pay us. And that's just a part of their minimum net. It's an allowable fee because at the end of the day, if they had to sell the house in foreclosure, if they took the house back, they would have to hire a real estate agent. So that's why they're willing to pay us to negotiate and facilitate the transaction. And they require an agent to be involved because they need someone to do that.
What kind of team have you built out? Because I can tell you must have a number of people working for you, cold calling the homeowners, the borrowers, working with the investors, a lot of expertise, I'm sure, talking to the bank as well. Tell us a little bit about your team and the systems that you've built out.
My team is phenomenal. Everybody here has been here for years. We have a phenomenal culture. We have 11 people on staff. We have about 8 people that come into the office every day, and the other 3 are virtual. So they're virtual assistants, VAs. And so basically how the setup is, you have the lead intake manager, which is Selena. And if you guys are referring them over or calling the office, that's who you'll be talking to. And she is the one pre-qualifying the homeowners. She's making sure that we get all the information that we need and that the investors are updated and that the homeowners are updated, which is huge because, people work so hard to get referrals, but they do nothing to keep it. And so our systems that we have in place is really everything. Like if you guys were to go to Google right now and Google the short sale queen, you'll see all of our reviews. And the number one thing that in common that all the reviews have is our update, that we've updated them every step of the way and how much they appreciated the fact that we were on it. So we strive to do that with everything. So Selena does that. And then once we have an active file, so we have a client that's on board, signed on, then it gets assigned to a negotiator. And then the negotiator will take it to closing. Stephanie is our operations manager. So she's the one that oversees that, as well as is the head negotiator. So she's the one that, making sure that all of the debt's settled, that the closings are happening, coordinating with the title companies, all of that. And then Cheryl is our transaction coordinator. So she's making sure all of our I's are dotted and our T's are crossed with compliance and to make sure that everything is submitted. And then we have the VAs that are assigned to a negotiator where they are simply just calling the banks to say, hey, did you get this email? Hey, did you get this call? Hey, what's going on? So they're not doing any negotiations. They're simply just calling and really bugging the crap out of them so that they don't drag it on. So the industry standard for short sales is a year plus. Right? So that's how long it generally takes people in the industry. Our process, it's 2 to 3 months. And the reason why is because we have everything dialed down. So we make sure that we're proactive, we have everything sent at once, as well as the people that are assigned to it, they're on it.
What is your area that you do this in? Is it primarily Dallas, Texas, or are you in other areas?
So we're in 13 markets. Which means we're in 13 states. So we're based out of Texas. So we cover all of Texas. And our primary markets are Florida, New Jersey, and North Carolina. But we are in other states. So when I say primary, I just mean where we do the majority of our short sales. But we have the ability, we are nationwide. So we have the ability to help people all over the country as long as it makes sense where we have good partners in each state.
What advice would you have for investors specifically who are looking to do a short sale need help with a short sale, where would you tell them to start and how to be successful at that?
The best advice I can give an investor that is, looking at this solution is to remember that this is another exit strategy. This is another tool in their tool belt. Look at every lead as an opportunity. You need to have a solution for every lead that you get on board, that you build rapport, and that they're willing to sell to you. And this is so important because a lot of investors, if it doesn't fit their exact model, they just keep going, right? So their cost per lead continually goes up because they can't create a solution for all of these leads. And we know how the data is hard to find. We know how expensive it is. And we know how frustrating it is if we have a ready and willing seller that's you've been able to connect with. So best advice I can give is have a solution for anybody that you talk to, whether you're doing it personally or you have a good relationship that you can outsource and still get compensated. As far as short sales specifically, we have so much free information for investors and realtors. YouTube, if you guys look up the Short Sale Queen, I do free videos for realtors and investors on how to target these clients, how to build rapport, how to work with them. I mean, we do it. We do foreclosure updates. I mean, there's a lot of knowledge in this space if you guys are doing any type of direct marketing.
And how would people then find your YouTube channel, get in touch with you, find out more about you?
All you do is put the Short Sale Queen in YouTube or youtube.com/the Short Sale Queen, and you'll see our channel. You can even Google the Short Sale Queen and a bunch of stuff will pop up. And then you can go to thessqueen.com and you'll see all of our education, where to send the lead over, who we are, how to partner with us, things like that.
Nicole, I want to thank you for having this conversation with us today and taking us through the short sale process so that we can understand it from the borrower and homeowner's point of view, the lender's point of view, the eventual investor's point of view, and then how you've put together a team and systems to facilitate everything. It's been really interesting and I've enjoyed this conversation. Thank you so much.
I have too. I appreciate you having me on. And as always, if your audience ever needs anything as far as being a resource, we're happy to help.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group, and you can find out more about me by going to higinvestor.com. That's higinvestor.com. And you can also ask questions and join us on Facebook by going to RPOA, Rental Property Owner and Real Estate Investor Podcast. This episode was sponsored by Green Property Management,
now offering a $250 per unit project allowance to new clients in West Michigan. Find out more at livegreenlocal.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com.
You've been listening to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association. You can find out more at rpoaonline.org. If you enjoyed this podcast, please go to iTunes to subscribe, rate, and review.